I was thinking, do we even need to do a show today? I mean, it's all about NVIDIA earnings tomorrow after the close. I mean, we should just shut everything down for 2 days. Wrong. We got macro news. We got individual stock news. We got an S&P 500 ad. Not much in earnings. We got analyst ratings. We got Todd Gordon at 8:35 Inside Edge Capital. Get his perspective on the markets. Fired up on this Tuesday, folks. It's pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, good morning, folks. A little weakness from the close and some catalyst to the downside. We're down about 8 handles, 64.47. Not really building on Friday's rally for the second day in a row. The buck down 19 cents after a pretty good day yesterday. Seems to have alternating up and down days. TLT, just quiet, down 16 cents at 86.64 USO. Peeling back a little bit after that big day yesterday, down 37 cents, 75.38. GLD and SLV both up, both quiet, both consolidating near the high of the move. And Bitcoin down $1,100 in the futures here. Are we heading for 5 digits in Bitcoin? Let's bring in Money Mitch here for the second day in a row. Triple D still under the weather, but Money Mitch stepping in his place with that nice new haircut there, buddy.
Hey, you know how it is, right? You got to look like you're making it, right? You got to. They don't call me Money Mitch for no reason, man.
All right, so we got to start with the macro news, right? I think it roiled the markets last night. There's no doubt that Trump putting pressure here on Lisa Cook to resign. I mean, bring in the Brentster here, provide us a little bit of color on this. It's macro. We got to cover it.
Good morning, pre-market prep. What's everyone doing? How's everyone doing? All right, Joel.
Well, I know that everyone's doing probably better than one Fed member this morning.
Ooh. So we'll get to why this matters. Triple D texted me this morning and said, this is the macro driver for the day. So we're going to get to why that might be the case. But first, let's talk about why Lisa Cook is garnering all this focus, all this attention from Trump, and we'll get to a little bit more of that in a sec. But Trump is alleging that she took out 2 mortgages on a primary residence, which would be some kind of mortgage fraud. So this is the leverage that Trump is using. A lot of people have been saying, like, can Trump actually fire her? Well, it's a similar case as when we talked about Powell potentially being fired. Can he technically fire her? Yes, if there's a cause. If there was some kind of like mortgage fraud or something like that, that would be a notable cause to get her fired. So can he actually fire her? Yes. Can she take it to court and go through a process? Yes, also. So we were kind of like, trying to consider sort of like a trading idea on this topic. And Mitch, you had a really good thought on, yields being impacted and like why this matters to the market. We had Carmen in the SCN room, like asking, like why are futures slipping on this? Let's get into that a little bit.
Yeah, we all know at the end of the day, when we were in April, what really spooked the market, right? It wasn't the equities, it was the bond market, right? And that's what everyone's been focused on and kind of moving forward with the inflation focus. It's really not so much inflation, but what will that do in terms of the yields and the outlook there? So we saw a pretty dramatic move in the bond market as the yield curve steepened further and definitely causing concern, right? And what does this mean for short-term yields as they are falling against the long-term yields, right? The long-term yields are starting to climb there. The 2-year dropped about 3.71%, down 2 basis points, suggesting that investors are betting that the Fed could move towards rate cuts sooner than expected. So, like Triple D mentioned, driver, right? What are we looking for? rate cut expectation, right? But at the same time, the 10-year rose to 4.29% and the 30-year pushed past 4.93, signaling to investors that they want extra compensation to hold the longer term debt here, right? So the catalyst wasn't really in a usual, like we get economic data, right? It's this firing of a Fed governor. So I think that this is definitely a little bit murky. We got to see how this kind of works out, right? But if Trump can really reshape the Fed with a more dovish voices, right, short-term rates could come down faster. And I think that that's what we kind of need to keep an eye out here, right? But the risk, of course, is that the Fed looks less committed to fighting inflation. And that's the one thing you hear Jerome mention all the time, right? My biggest focus, inflation, inflation. There's a reason why, right? So in short, to keep it short here, the front end of the curve is pricing in more rate cuts. Yes, and that's a big impact on how we could see the markets react today. Long end is flashing concerns about inflation and the Fed independence, but I don't think we'll be too concerned about that. And that's why we've gotten this bear steepening, right? The lower short yields and higher long yields. Now we need to kind of keep watch. Also, we get PCE on Friday. That's going to have a major impact on how this also is going to be viewed.
There are 7 governors on the board. So something to consider here. There's kind of like 3 doves right now and kind of like 4 hawks right now. Lisa Cook being one of those kind of like staunch hawks. So if she can get off the board, if Trump can get her off the board, and then there's and put maybe a governor that he is more prone to, maybe there's 4 doves on the board now and only 3 hawks.
The market's reaction is that lowering rates at the pace that the administration wants is going to be highly inflationary. And whether or not it's needed for comment, I mean, this debate could go on for so long, right? Because we thought tariffs at this point were going to cause a lot of inflation. And right now, the data, the PPI, you got mixed data. I mean, what you have to understand with the Fed right now, with what's going on, is that these numbers can change, and they can change with some data. It can change with the jobs data. I mean, if you take an unemployment level right now, historically, it's pretty darn low, right? Over the course of time. So Midge mentioned PCE, jobs data, and then 2 inflation numbers for 4. So, as much as you could say the Fed funds tool is, whatever, 70, 80% for 1, we're doing that for sure. And then maybe 2 and maybe 3, it still could change. And right now the market's signaling that the bigger money is saying we don't need lower rates for the time being. And that's the price action. You spike down in the S&Ps, yields are spiking. It's all, it's all about expectations and what's actually going to happen by the end of the year.
And I think that we got to see what happens here. I think will Jerome Powell pay her salary? Because he's the one probably that signs the check here. Does he pay her? There's so many. There's a
lot of implications here. But let's move along. S&P additions. The rumors started floating around like, hey, it's going to be released. Triple D was on it. Everyone's on it. Everyone knows. And what do you need to do? What do you need to do? You need to look at Robinhood, right? Robinhood. Oh, added so many times, right? This is the time for Robinhood. Algos did not bite on this one. Not at all. So let's talk about what did get added.
I mean, it was a broker, right?
Yes. Yes, it was.
They picked the right broker. That's the real question. But hey,
in my opinion, yes. I think Interactive Brokers been around for a long time, right, in the markets. Got started they were IBKR. I mean, yes, I'm old. Yes, I was on the floor. Yes, they were making markets in the options markets. Very quantitative firm, well-rounded, a lot of big accounts, institutional accounts. A lot of traders on it, and they have a lot of money. Franz K says IBKR rules. So They're a different kind of money manager, right? They're, as far as, analysts, they're just about managing the money. I think they pay like the highest interest rate on your margin, right? Or your excess cash in the account. So I'll give my technical perspective. Mitch, you could throw in whatever you want on that. Then I want to carry this segment out a little bit more. The initial spike took it all the way up to 67.75. Why is that a good number or near a good number? Because the all-time high is 68.07. So you've backed off there. That's where the big boys are standing to sell. What's your take, Mitch?
I think all the brokers are doing well, right? I mean, you can just take a look at Schwab. You could take a look at Hood. I mean, I don't think there's many that are doing bad. And that just tells us also what type of environment we're in, all right? People want to invest. People are looking for platforms, whether it be Hood, whether it be IBKR or Schwab. It seems like they're out there investing. And that's all you really kind of need with these kind of places. And we've always said it, right? It's about customers. And Schwab is making its way back. It might break 100.
I know. Remember when it was going out of business during the banking crisis that they were over leveraged? Well, and someone mentions Webull also. Yeah, Webull back over $15.
That one hasn't gotten as high as some of the fundamentalists out there were saying. They were thinking that Bull would be more like a $30 stock, but I think it's just the overhead supply. It keeps getting sold in.
I hate this chart.
Yeah, it's a really tough
is
chart.
that an ugly chart? I mean, what do I do? I mean,
I don't think even Webull's happy that it went that high to start.
Like I got the 50-day in there and stuff, but the thing moves. I mean, there's some action in it.
But take us towards like how the recent additions have done.
Yeah, that's what I wanted to do. I wanted to talk about app. You know, that the algos are like, man, I'm not going for this one again. So they didn't get hurt on that. But there's been certain historical patterns when stocks get added and deleted, and there's some consistencies. There's also some inconsistencies. But one thing you can always count on is like that initial pop, like when the news comes in. And so that's why you got that in Interactive Brokers. But some people are just like, hey, I really want out of the stock at 67 or 67.5. So, they use the supply in the market to do that. But there's been some interesting ones here. Let's look at the most recent ones. XYZ, that was added in July. Well, you got the gap up, you got the pop, but you eventually got a fade. You got a fade in it. So that's the problem. The trade desk.
I actually like XYZ. Just I like that chart. I like that chart now.
What do you like about it?
So the key here is that this has gotten out of kind of like this basing action. You did get a push above towards 100 and undercut towards 60 that probably washed a lot of the traders out in between all that shake. Now you just need to kind of start clearing 80. The biggest thing is that don't forget this company is called blockchain for a reason. And blockchain is one of the biggest focuses right now of people looking for themes, right? I'm always a theme focused trader. I'd keep an eye out on this. If it starts to go back through 100, it's really going to start looking hot. For right now, it's kind of just building and building. And look at the volume that came in just a little while ago on that gap up. This was off the earnings, and this was on the July 22nd. There was 139 million shares traded that day. This stock trades on average 9.6 million. So 10 times the volume. That tells me something to keep watch for.
I'm more watching 82.50 here because matching monthly high. So 80 is a good psychological level. The removals, it's a little educational thing. The removals are mostly because the company's taken over. And so they're off the board. That was Hess. We all know Coinbase was added back in May, right? And I believe this was the bump up. And that just kept on. There was a little bit of a fade, but we all know what Bitcoin did. and boom, it was off to the races. Going back to March here, DoorDash was added. I was a little bit surprised about adding that to it, but that was added in March. I believe it was back in this area. Not much price action there. The thing, I just want to go to one of the removals here. And sometimes there's a, sell side pressure, but look what was removed in March. Good old Borg Warner. Okay. That's a Michigan company. This is in March. He got kicked out of the S&P, left for dead. A lot of selling pressure throughout March, and then bottom in April with the rest of the market. So the biggest thing to take away from this is that there's price action going on in these stocks that are not necessarily related to the fundamentals. They're related to the indexing. So there's short and there's long-term effects. So that's a breakdown. They go in, I believe they go in Thursday off the open. So we'll keep an eye on that price action.
Something definitely to keep watch, and we'll see what happens. And Hood, man, everyone thought they was going in, and it's still seeing the door on the outside.
All right. Big news, quantum news. AMD is going to do a collaboration deal with IBM. Brent, you want to give us some color on that?
Yeah, I'm going to read a little bit from the press release here. IBM and AMD announced plans to develop next-generation computing architectures based on the combination of quantum computers and high-performance computing known as quantum-centric supercomputing. Companies will collaborate to develop scalable open-source platforms that could redefine the future of computing, leveraging IBM's leadership in developing the world's most performant quantum computers and software. Shares of IBM this morning. Did they respond?
Yeah, it wasn't up $1.57, 241. Coming off the low of the move, looking for a catalyst. This is a little big of a catalyst here, but consolidation here, multiple highs in the same area. Let's just call it 243. But I mean, it's trying, like when you have these kind of patterns, when you got hit after earnings and then you get hit again, it's okay to put these kind of patterns in, but you want to get the hell away from there. So that's a technical look on IBM, and I'll do my AMD, Mitch, and then you can let us know what you think on the technicals. AMD has been a wild child, but for me right now, the really important thing is for this to get back in the 170 handle, 170, 150. Took a nice haircut over the last 2 weeks, coming off that recent high of the move. Found support, bounced with the market, but not getting back half of this move. So for you long-term AMD holders, well, I'd sure like to see this thing over 170, over 170, 150, and headed back toward the recent highs in the move.
Yeah, I think what we really got to think about, right, is that what are they trying to do, right? At the end of the day, what's IBM's intention and what's AMD's intention in this, right? Let's be honest. It's to compete with NVIDIA, right? Because if they're going to compete with NVIDIA, you're going to have to start seeing some of these smaller companies work together, right? To try to partner up and compete back. Of course, this actually combines two of the biggest areas that we're focusing in themes, right? Supercomputers and quantum, right? Why not just put them together? That's exactly what they're doing here. And I think that we start to see how this expands and you start to see more mentions of supercomputers and quantum playing together. Another thing that's going to be important is looking to see when we get information about they want to do a demonstration showing how IBM's quantum machines can work with AMD's chips. So that's another thing to look forward to. And another nice driver for AMD. I think at the end of the day, the winner here is not necessarily IBM, but more AMD, because we all know how everyone's kind of keeping a very close eye to see how much market share can AMD grab in this space. Because if they can grab even the smallest amount, their valuation is going to keep going higher and higher. So I think this is one to definitely watch. I like AMD. I'm not a fan of IBM by any means necessary. For AMD, I'm looking to see if we can get towards the 50 EMA. That's going to be a more 157 look, but we're getting close. We're getting sideways consolidation after a breakout, which is good sign. not a negative sign. It's a positive sign that you got in the breakout and you're not going straight back underneath 150. You're holding in here. I think you got to wait to see the next tech run. But this is one to keep watch.
Richard saying IBM still the leader in quantum. That's something that we've been talking about the last few weeks here. IBM really kind of like trying to push its way into quantum. And of course, we have our small cap quantum names that are responding. I'll give you a little bit of a watch list here. IONQ initially moved lower, kind of has rebounded now. RGTI, Rigetti, also one of our quantum names that we like to look at. QBTS, D-Wave Quantum. All of these move lower initially and have kind of rebounded here, assuming the move lower is investors pricing in maybe some more real competition from a powerhouse like IBM.
Yeah, I think one of the things is don't forget in quantum, guys, this is way out in time. No one's really using and developing, let's say, products or revenue driving kind of software that's coming out of quantum right now. So I think that's one thing to always keep in mind when you're playing quantum.
I mean, if you look at the fundamentals in some of these companies, which don't always matter, I mean, they're not making any money. I mean, you know, does that matter? Well, not necessarily.
It's like owning an NFT, man.
Yeah. Yep. Okay, let's go to some drug news, and we'll take a look at Lilly, and then man, I'm just guessing in my head where Viking Therapeutics is, but we got some news. We got some news on Lilly on the obesity drug front. What do you got for us, Brentster?
So Attain 2 trial by Lilly, this is their oral obesity drug, met the primary and all secondary endpoints. And we know that a sticking point of this type of news item, obesity drug trials, has been the weight loss reduction. The weight loss reduction for this indication, it's called orforglipron, 10.5%. We know that is, we were looking for 12%, we were looking for 15%. But of course, this morning, investors rewarding Lilly shares here, and our few peer plays in this space that we had been looking at. Joel already hinted at one, VKTX, a competing obesity drug pill. Also, Novo Nordisk, NVO, also has a competitor there. And then another one, this is a smaller name, Structure Therapeutics, GPCR, has been also viewed as a peer here in the oral obesity drug space.
GCPR, yeah, that's a smaller one.
GPCR, Golf Papa, Charlie Romeo.
Let's not talk about that stock anymore. No, I'm just joking. All right. So Lilly got the beats after a good report and raised guidance, but the factor figure on the percentage loss was disappointing news. You put in a nice technical bottom man, and then you got a catalyst, and we broke it down, and we didn't take the insider buys. There was a group of them. There's like 2 or 3 of them, and we weren't all that impressed. The reason we weren't impressed was because the guy owned like a zillion shares, and like he bought like another thing. So it wasn't a huge percentage, but like 2 or 3 of them did it at the same time. Well, algos don't do that. They don't read that deep. What they saw was that there was 3 insider buys, and it's been strong, and it's been getting some news. Always the technicals get tough when you get a gap like that, right? There's always expectation that the gap's going to be filled. And I'll just give you now there was a couple highs at 719. So you're still $6.50 away from there. Interestingly, you spiked in the pre-market, you spiked to 715. So am I a buyer at 712.89? Think I'm going to dump it at 715, 716? No, but if I've been buying this thing on the dip and got sub 650, I'm not looking for a move back to the 50-day moving average. This is a pretty nice pop. It shares a Lilly being around. We'll see what kind of imbalances it gets off the open. Sometimes Lilly comes in with a big buying balance off the open. Maybe you get it at that 717, 718 area. VK, I just wanted to cover VKTX, Mitch, and then you can hop in with your technicals. Man, consolidating near the low of the move. You can say you had that panic day low and just hanging out. So maybe everyone is out, but boy, no one rushing to buy this stock.
Yeah, I think, we just got to think about how much this can expand, right? It said that over 8% of Americans are already on GLP-1s. So that's a pretty good number, right? I mean, 8%, that's pretty high. And then when you think about it overall, the amount that this has increased has been massive quickly, right? And I think we got to look to see how this continues to expand. GLPs have increased nearly 600% between 2019 and 2024. But one thing that we're looking at, right, is the kind of adoption, right? And I did a little bit of a really quick Google trend search here, and I like to do these just to kind of do a little bit of a check on what's kind of showing up there, right? But you guys can see clearly here, Wegovy, Zbound, search wise, it's growing and growing. If anything, it's at the height. Right? It's not on the turnaround. I was thinking that maybe these were finally starting to turn around and the hype wasn't there. But at least the search data is telling us that more and more people are searching for these. Another thing that could be starting to be thought about is, are these plays somewhat seasonal, right? Because I know how it is. A lot of us start looking into kind of weight loss environment and thinking towards the holiday time, right? So I don't know if that might be able to play in here, but could we get another GLP run here, especially as we're getting rates to come down? That's going to help some of these healthcare companies. And Lilly's just been hanging out here off the 700. Yeah, I think it's prime to kind of lift off. NVO, I just can't see this one winning anymore. If it can't do the moves that it needs to do to get back to 150, right? And it's at 55 here. It's done everything it could. It beat Lilly to an obesity pill, right? And it still is not winning. So in this case, I think this is just telling you this is a dog with fleas, and dogs with fleas, you can wash them, clean them. They're probably going to get fleas again.
What's your take on Hims here?
Hims is a little different. This is going to be an interesting battle between what they're allowed to advertise for, but they've been really heavy on advertisement. I think this is one of those names that the hype has just fallen out now, and you got to be careful here. I think at this point you're definitely you're not able to hold any rips anymore. So I think in this one might just have a battle for the rest of the year. I do still see the advertisements everywhere. So that's also something that can keep an eye out. And I did see that they were getting kind of hit on those ads. So maybe they're putting them in places that they shouldn't be, right? I know I get them on YouTube all the time. Do you guys get them on YouTube? Let me know. They're trying to keep my hair, dude.
No, I don't. I try to turn those off. So, when's the last time we talked about AT&T on this show?
This one's a favorite for you. You still holding this thing, Joel?
Yeah, me and my dividend.
He's so excited about holding AT&T, as you can tell, folks.
Yeah, that great dividend.
Well, let's give the news here, but I think it's actually not the worst area to be in. I'll talk about that coming up. What do we got on the news wise on this?
Well, so they're go ahead, Brester.
Okay. So they are going to be buying a bunch of spectrum, over $23 billion in spectrum from EchoStar. That's ticker SATS. Also, importantly, AT&T, in the press release that they issued to announce that they're going to be buying a bunch of spectrum licenses from EchoStar, AT&T reaffirmed its fiscal year 25 guidance. So, a couple of dynamics here. AT&T spending a bunch of cash, but also having some reassurance about where they're going for the rest of 2025. If I'm thinking about it, just kind of remembering off the top of my head, I think this is the first major corporation that we've got some in between the quarter guidance. So this is good, in my opinion, that AT&T, a huge telecom player in the US, is reaffirming their guidance moving forward. What did you? I think you just were hinting at something intriguing there, Mitch. What were you thinking on this news item?
Yeah, I think it just goes to show you how much further telecom is moving into the digitalization and kind of moving into more of the satellite world. And I think that, these companies for a long time, they were viewed as almost dead. Like it's how we just talked about. You own AT&T? Ha ha ha. Pun intended.
Right.
But
Yeah.
that's slowly changing here, right? With space being included and all these kind of adjustments that they've done. I mean, just take a look at T-Mobile's chart there in the recent kind of action here, and it's been a nice breakout from 230, long-term trend line break from back in March of 25, and this is starting to get going. T-Mobile has done just as good as anybody in this space and really started a nice drive, but it's not one. Look at Verizon. It's also on a breakout. I think this has to do with maybe AI finally playing an impact on the telecom space, right? And how we're starting to kind of shift over into that. So I think these are definitely companies that, might not be the sexiest, but there's dividends here. They're on a breakout. And if you're looking for places for safety, these could be the stocks that you look for towards the end of the year. Maybe you want to play something a little bit safer and you've had your gains for the year and you don't want to be chasing the Palantir for the end of the year. So you're looking at stocks like this. But I will give, like always, Money Mitch knows some names here that could have a run off of this that is a smaller name. What about Lumen Technologies, LUMN, as a trade idea off of this headline to see if maybe this starts to get this stock going? Been keeping a very close eye on this name. This one has, telecom experience. It has edge cloud, cybersecurity, managed services to business. We're talking in this space, telecom space, right? So look to see if maybe this finally gets Lumen started. Above 5 would be the move, right? You need to see a nice move starting to break out above 5. One thing that tells me it is that this stock has gotten a lot of volume in the last year and a half. There keeps being this 40 million share spike. That's something to look for, as I do think that there's someone big positioned in this. Above 5 could have a nice breakout.
Yeah, it gets marginal above that level too. Let's just talk a stock for Craig LeBlanc. He went into his pocketbook to a nice tip toward our way. Woo! Tilray. Let's talk about Tilray here.
Tilray, Cannabis.
Tilray. We don't talk
the right
about
guy.
Stocks much. We don't talk about stocks under $5 much. But if you throw us $5, we'll talk. Big move yesterday. There's been some rumblings going on in the administration. I know we've have a couple people in the STN room saying, you got to watch, the government's going to get involved here. They are rallying and trading higher. I think it's more out of the administration. Big volume day yesterday. Let's just keep it going. Keep it going on heavy volume. If the volume starts to waver a little bit, I get a little bit cautious. It's so hard to say anything on the monthlies with a chart like this. But trading up here again in the pre-market. So make sure you just hold those gains in its bid, and to say identifiable resistance, I'll leave that to you, Mitch.
All right. Well, I think Tilray is one to definitely keep watch. Of course, it gets traded more because it is public. Don't forget about the OTC names, right? Or you could go with the ETFs. This is my favorite one in the OTC names. One day it'll come to the open market, and I will be looking to take part in it. TCNNF, that's Trulieve. We'll see if that can break 9. Tilray is definitely one to keep watch, right? You can kind of keep watch on this space overall, or you can do MSOS. But since you're trying to ride momentum with this move, right? Another way to play it is the leverage name, the MSOX, 2 times MSOS. And so then you're really kind of getting the drive if you're looking for the momentum. But the one thing that I will say, and it's always been, right? These headlines have always left in what? That it's a buy the rumor, sell the news type of trade. So don't forget that. Is this going to be the time that turns, right? I don't think so, guys. I'm still in the camp that this is still a buy the news, buy the rumor, sell the news. At some point, we are going to get a little bit of a gap up, I feel, but that day could be more of that selling. And why? like always being talked about, and I know Dennis would like that I say this, the overhead supply in these names. Every time they're going to get pops, there's going to be some people saying, I've been in this name for 5 years. Let me get the hell out.
Guest time here on pre-market prep. We got Todd Gordon in the green room. Todd Gordon, Inside Edge Capital. How you doing today?
Hey, Joel. Good morning, guys. What's going on?
Did you go to the Travers Stakes?
We did a little backyard party. Joel, I mean, with only 5 horses running in the Premier,
I know.
I didn't want to get dressed up, and Sovereignty seemed like such a domination. Plus, I didn't have a handicap or a write-up from you. So it was like 0 for 3. We did a backyard party.
Yeah, I think I'd like that too. I mean, I do something I rarely do.
What?
Like you don't want to bet the favorite, right? The favorite's the favorite. It was like even money.
Yeah.
And I looked at the field and I'm like 5. So I'm like, I'm going to get the perfecta on this somehow.
You get
right? The exacta.
Okay.
I still call it the perfecta because that's what it used to be, but it the exacta.
I just showed my inexperience in horse.
No, I don't. Everyone calls it. I think we're going back to the 70s and 80s when you called it the perfecta because you had to be perfect 1, 2. And so I loaded up on them, and what I wanted to happen didn't happen. I wanted a long shot to come in.
Was that the 17-1 horse that went out?
Any long shot, I wanted to win, and Sovereignty would have been second. And then I would have had a really nice payout. But I went heavy enough with Sovereignty on top that the one that paid it paid $10. That exacta paid $10. So basically, I was getting Sovereignty to win at 4-1 is the way I played it.
All right. Seems like a reasonable trade.
Yeah. And if Sovereignty got third, then I'd be like, I'm never betting on the favorite again. I mean, that's just that's the way
do they still call Sarah? And I live here, and I like Joel, if you lived here, would you be as active in horse wagering as you would? Like, I try to stick to one vice, but like, is Saratoga still known as the graveyard of favorites? Is that still the case?
It's called the Graveyard of Champions.
Champions, okay.
Yes, and the reason for that is I believe 2 or 3 horses that went on to win the won the Triple Crown.
Yeah.
The most recent being American Pharaoh.
Right.
Go to the Travers and get beat. And I was discussing that with my wife, Lisa. She's like, well, they're tired after winning the Triple Crown, And I said, yeah, but that's why they call it. But horse talk, we could do horse talk all the time. And no, if I live there, no. I mean, hanging out at the track. I mean, unless you got buddies in the paddock, I think it's really hard to beat the horses. But
we try to go with when we have friends in town and we want to entertain them. Like we did go to the Belmont though with a bunch of friends, a couple clients, and it was a great time. We had a table right up front, right at the finish line. I don't know how we snuck in there, but yeah, it's fun. It's been a great summer. I'm sad to see it go. We're looking forward to ski season. But yeah, all good. So sorry that didn't work out.
Macro.
Yeah.
We did our talk at the top. The macro. Throwing in this Lisa Cook, throwing in the Fed, throwing in Trump, putting pressure on Powell, talking about that move on Friday. I know it's something that you focus on. So, let's just talk about the yields, the 10-year, the 10-2, the technicals. What's going on in macro land?
I even threw some slides together. I came prepared. Can I pop up the screen?
You got it. If you know how to do this stuff. Share and the Brentster, once you get them up there, they will bring them to our chat.
How about screen 1?
Oh, this
boom. Did it work?
It did.
Hey,
there you go.
Look at that. This is a presentation that we did for clients last week. And what I did this morning is just updated the chart. So I don't want to say I did a whole presentation for it, but I did update all. So it's all fresh data.
Okay.
I hope you'll take that. It's not like serving leftovers.
We appreciate it.
I mean, what are we seeing here? We're right now 86% chance of going down a quarter, which I kind of thought after the dovish sort of approach, we might have a 9 handle on that probabilities of a rate cut. So fine. Just where are we, into the end of the year? So we're 4.25, 4.5 on the Fed funds. There's 86% chance in September going down 25. And then by the end of this year, there's 79.6% chance of being 50 bips lower. So, okay, fine. And you stop me anytime. I've got about 4 or 5 slides. I mean,
no, let's get them and then we'll get our questions together.
Okay. I can't remember a time even pre-COVID when, interest rates were perpetually 2.5%. Inflation was basically non-existent. So after the 2020, 21, 22 rally, man, we are real tight in this 10-year yield. Joel, I try to live my life as to be one who doesn't, spew fear and try to capture attention by saying the world's going to end. However, what happens when we emerge from this 2.5-year coil in the 10-year yield? Where are we going and how's the market going to interpret this? Because it's pretty tight. What do you guys think? I mean, up, down. I mean, and the thing with fixed income and macro is okay, why are interest rates going up? And how do the other 3 asset classes interpret it? Right? If we go up, is the dollar going up with it? Is that deflationary? Is it a flight to safety, or is it money diversifying from the rotation in international equities into American equities to get a piece of our AI trade? That's going to be a big question for me at the end of 25 into 26. And if you have anything, please interrupt me.
Yeah, I just I think what the market is trying to tell us is that they're really afraid of really rates going a lot lower at this point.
Lower?
Yeah. I mean, they want it, and they say everything's good, but you talk, that they're good short-term implications, but you just talk about the longer-term implications. What's this going to do? What's this going to do to inflation? What is if we start lowering rates now, is the Fed signaling, yeah, we're in trouble?
Well, that's what I think, Joel. It's if the Fed you said, okay, fine, we'll give the market the 50 basis points. I think the takeaway at the other end of that is the Fed sees the market, the economy a little weaker than it is. I don't think we want the 50 basis points cut, even though the macro, I got a few more slides behind this to say everyone is really, a lot of people are screaming for it, asking for it. I don't think we want it. And I think that's what you just said too.
Yeah. I mean, it's always the longer term effect, but go ahead. Continue with those slides. I like
Okay. So off of the St. Louis Fed, we're looking at expected inflation. More to that point, Joel, and this is kind of what makes me nervous, is if you look at 2-year, 5-year, 10-year expected break-even or expected inflation, they've all taken a tick down here in July and August. 5 years lower, the 2-year not as much, but the 10-year, I would say, we're up at 2.5 down to 2.1 here in July and August. That's not insignificant. I mean, that's only 10 bips away from the Fed's inflation target, which we now know after the Fed meeting, and they're not doing this FAIT procedure by, waiting for the overshoots on one side, in prior readings to delay action. At this time, the Fed's going to be more proactive, which is the takeaway. So all of a sudden we're down to 2.1 in the 10-year expected. Is that also signaling coming weakness in the economy? Why is inflation dropping? Is the tariff fear coming off? Is trade wars going to start to abate? For me, I'm why did we see such a quick drop?
Good point coming here. Before you go to the next slide,
Please.
Steve Canyon here says it's not inflation; it's the devaluing of the dollar.
It's the valuing of the
devalue.
What does that mean, though? What do you mean the devalue relative? So there's 2 ways to look at FX, domestic spend. The value of our dollar within the border is devaluing because of inflation. But if you look at the dollar around the world, I mean, we're very well bid. I would say the dollar's in a decade-long uptrend. true, we're in the lower end of a recent range, but relative to foreign currency, the dollar is one of the strongest plays in the world.
Yeah, for us. But if you look at, you talk to Dennis or other people that, they're down on their portfolio for the year, right? Where, because they hold the majority of their assets versus, the Canadian dollar and stuff.
That's my point.
Yeah.
That's my point. The dollar is up relative to other G10 and, currencies around the world. That's my point.
Okay. All right. Let's keep going with the slides.
Okay. All right. So very much related, as inflation expectations are dropping, even though the 10-year yield is in that coiled tight spring, real yields, right? Because if you're you're borrowing, you're borrowing at 4%, but the inflation is running 2%, your real cost to borrow is 2%, because your debt is being inflated away, or other way around. Like if you're making 4% on fixed income investment, but you're being inflated away 2%, your real return is the real yield. So real yields are dropping because inflation expectation is going that direction. I don't know if too much to get into this. The yield curve, the relation between 10s and 2s did go inverted here in August, but by way of kind of the short-term yield staying flat, the 10-year and 30-year went up, taking us out of inversion. So again, that longer-term yield curve, the longer-term yields kind of bumped up a little bit here. So maybe coming inflation. Lot of money on the sidelines. I mean, we just hit we're at like 7.4 trillion in money markets. So again, if we're going to drop 50 basis points, setting aside the conversation of maybe a weaker economy, is that money going to stay in money markets, making 50 basis points or whatever the correlation between money market returns and Fed funds? Is it going to stay there? Where's that money going to go? I just speed up real quick here. I'm seeing kind of related, as I said, I don't try to sell fear. I think we're in a secular bull market, but we're also seeing value stocks start to outperform. So Purple is your Vanguard value ETF. Just over the last 3, 4, 5 weeks, and Purple value is making a new high, while growth ETF out of Vanguard, their flagship Vanguard growth, making a lower high. So like here's the Vanguard growth value ratio. And you there's this old technical pattern called 3 drives to a high. So I'm a little concerned that we're starting to see a little bit of rotation into value for everything that we just said. I'll skip that. So related, I do have a VIX call spread on for September, which I'm big time down on in our portfolios, but I may look to establish that out. Markets continue to go higher, but for all those reasons I just mentioned, I am a little concerned, Joel.
No, and it's good to we could talk more about that spread in a second. I just want to talk about the rotation from value to growth. And I think a couple weeks ago I read that the IWM was at its lowest correlation to the triple Qs that it ever was.
That's interesting.
Yeah. And we've seen these false starts before. Value's coming back. Warren's coming back. Value. And it seems to all end with a resounding thud here, and the market migrates back to the mega caps. Perhaps is this a changing of the guard?
Well, I love looking at these relative rotation graphs. These are great, right? So instead of looking at a chart that ticks from left to right, we rotate in a big clock. And this is a monthly relative rotation around the center benchmark, which is the S&P. VUG is Vanguard Growth, VTV is Vanguard Value. And you can, they're available over there on stock charts, and you can literally rotate and watch these things trade in basically a clockwise fashion. Vanguard Growth, this is a 24-month chart here. It went from the improving over to leading, dropping out, threatening to go into weakening. And then if we move, west to east and east to west, that would mean growth is underperforming value if they switch locations. We're starting to rotate out, but is growth starting to do a hook back up? Okay. And if you've never seen these charts, you probably have no idea what the hell I'm talking about, but that's okay.
We actually had, what's the gentleman's name that does
who created these?
Yeah.
Yeah. Julius de Kempenaar.
Yeah. Okay.
Yeah. So if you were to see, and these are available for free, they're great. If it was to rotate back this way into leading, all the caution that I'm trying to put in front of you is right out the window, and like, dude, party on with Grow Trade. So, you can kind of watch them. This is the monthly, and each one over here is the weekly. Each dot, or, whatever is called is 1 week. So if growth stays on the right, growth's in control. We're threatening to rotate out. So we just got to watch the macro. And Joel, that's how I approach the markets, is like, I always look at the macro. What's going on with the 4 major asset classes? Is it fixed income, commodities, currencies, or equities? Then you break down, you look at where's the market's preference for growth or value. Then you do sector rotation. Then you find the best sectors, and then you do the fundamental technical scans for the best stocks that make up the portfolio.
So is this something you look at once a week, once a month? I mean, once every 2? I mean, I know you do some great newsletters and stuff. Also, these charts are available for freeware at
I think they're on stockcharts.com.
Okay.
Yep.
Okay.
Yeah. So
how often do you, like, once a week, once a month?
I wish I was more formulaic in my approach. Like, Joel, like, I'm running money now, but I watch the markets like I'm still a day trader and a position trader, swing trader. Like, I'm here every day. Like, I've got guys who run the money management business for me, that, the back office, financial planning. Like, I watch the markets all day. So I'm just constantly, you got to listen to what the market's telling you. And I find that you watch what's going on in CNBC, you watch what's going on social media, what the predominant theme and driving themes, and what's everyone's talking about. And then you just go over and use your basket of tools and figure out what's being talked about. Is that manifesting in your tools? And you're just constantly looking for disconnects and the difference between what people are talking about and what may be happening at the hard right edge of the chart. Like, I think that's opportunity. So I'm looking at where the disconnect is, and the disconnect doesn't always show up on a regular basis.
Top-down approach. All right, let's talk about some inside edge positions that are on your radar, and then we are gonna. I know you're gonna whip up some exotic NVIDIA earnings options trade for us.
No, I'm not.
You're not gonna do that.
I'm trying to use options for hedging.
Okay.
I'm trying to grow up. I'm not a short-term day trader anymore.
Good. Okay.
Slinging options. I'm trying to mature, Joel. Can you let me do that?
What? Remember when you thought Bank of America was going to 15?
It did, didn't it?
No. If we don't win this, I'm not going to go.
I don't know.
Talk about some of your
Bank of America actually looks great. I was just looking at this the other day.
Talk to me about some of your active positions and inside edge, and then I just want to ask you about inside edge capital again.
Yeah. Hey, listen, that Bank of America weekly is not bearish. I'll tell you what. Okay. That thing kind of looks awesome. I mean, obviously NVIDIA coming up. Kind of some fun ones that, in this sort of somewhat of a rotation out of growth into value just in August. And again, you're an old school trader. You know the deal. I am medium school. Summer doldrums are real. You can't fall too much in love with the dynamics that are working in an August market. So I'm kind of finding some fun trades out there. This one I came across, Life 360. Have you ever heard of this company?
No.
All right. So it's $10 billion market cap. The valuations are pretty insane. And what I'm using here, these are GAAP earnings. So, we're looking at making 28 cents a share in 25, 31 cents in next year. So not huge expected growth on GAAP. Non-GAAP looks a little bit better, but this company is this is a location tracking company. I got twin boys who are 12, 11. They're going to be 12. They just got phones. My wife's in Boston with my daughter. So I can track what they're doing at all times. I know how fast they're driving. And it's embedded within Apple. And I've looked at why wouldn't Apple eat their lunch and just do this location sharing? And it's just not a big enough total addressable market for Apple to kind of redo their iOS. So it looks like they've got some protection from Apple and Android as well. This company is just, it's up. We started at $30 in, when was this? In April of 25. Now we're at 90. So yeah, we're getting a little bit stretched here. So if we can kind of, and the company just came public as well. So if we can kind of base a little bit, maybe into the 50-day, maybe into the 20-day, get a little bit of consolidation to 80, this might be setting for another go. And I know all the parents that I talked to, they pointed me to this to keep track of the kids and know what trouble they're getting into. So they're pretty well moted out from Apple. So watch his company.
You're letting the kids drive at 12. My dad made me wait until I was 13.
No. Yeah, I probably ran on sentence that one. What I meant was how fast no, you know what you actually do is you can track if they're in a car with another parent, how fast that phone is driving, which you know if the parent is driving irresponsibly. You can, you know, it's pretty unbelievable. So it's a good subscription model. You know, another one that I'm finding, have you heard of SARD, Sport Radar?
Yeah, I have. Was that a SPAC?
It was, I don't believe it was.
No, it wasn't a SPAC. No,
No.
it didn't have that $10. Tell us about this one.
All right. So this is a $9.4 billion market cap, still small, based out of Switzerland. This is a company that kind of controls Major League Baseball and other sports data. They're like the API or the pipe that pipes the data into different gambling outfits and online wagering. But they also, like, if you watch baseball, Joel, are you a Cubs? No. Who's your
Tigers?
You're Detroit. Oh God, you guys are gonna kill us this year.
Well, I hope so.
Detroit and Milwaukee are killing me. If you ever see like StatCast, Major League Baseball.
Yeah.
This is the company that powers it. So
really,
yeah.
So I wish I would have known about that.
Yeah, so I kind of feel like baseball, relative to the other major sports, is exploding. Yeah, I mean, I'm biased. I'm coaching baseball as well as skiing. I feel like with Shohei Ohtani and with the Koreans that are coming up, baseball I think is gaining even more traction in Asia, as we know in Latin America. I feel like, you know, relative to football, basketball, and hockey. Hockey's obviously an international grow, but I feel like of those four, baseball has the best chance to continue to grow. As you know, golf's going through their issues between PGA and Live Golf. But you know, I feel like with data being disseminated to both MLB broadcasting as well as wagering, this is a company that's still under the radar. Valuation's a little bit better. I understand this is 70 times forward earnings, but again, this is GAAP. This platform only uses GAAP earnings. Non-GAAP is a little bit more favorable. I think it's about 30, 35 times earnings. And, you know, I did my little bit of old school Elliott wave. I'm trying to get away from it.
Yeah.
And, you know, because the market's just going up right now. And I tried to pick out some resistance levels. It's starting to hold into the 32 area. If we break through 32, forget about all the stuff that's on my chart. I think we're probably going higher. So too little fun.
You know what saved baseball?
What's that?
One thing saved baseball.
What's
Because it had a bunch of old people like me, you know, watching it and listening to the radar, listening to Ernie Harwell, right? Great Detroit announcer. The pitch clock.
Okay, fine.
That saved baseball.
I agree.
Baseball was like you sit there and the pitcher and then the batter and then the guy adjusts, you know, everything, and then they back in and then they change pitches. But that pitch clock, I think, really saved baseball.
It did bigger bases, but you know what? Also, like, I coach baseball. I freaking hate how competitive it is, Joel, because all these kids have access to statistics and data, exit velocity, pitching velocity, pop time with catchers. Like, it's become such a stat-driven sport.
Oh, man.
People are becoming crazy for it, much to the detriment of the kids because of their arm, and like everything we're working on is prevent against Tommy John. And Mitch, I know Money Mitch is like, he's extremely smart about baseball. But the kids are being hooked on it with all the stats, and it's becoming so AI driven. Like, kids are really being hooked into it. So I think they're being grown at a younger age too. Wow. And to your point, we have 2.25, hour baseball games now. People can sit through and watch that game.
Yeah, exactly. And I haven't done. Okay. We extended the interview. I'm glad we got to cover a lot of things, but just tell us more about Inside Edge Capital. You know, I know you've been working on this for a long time. tradinganalysis.com. I know you moved away. Tell us about Inside Edge Capital, a little bit more active management, and how people could get more information.
Oh, I appreciate it. Yeah. So it was my lifelong goal to run money. I spent the last 20 something years trading the markets, hedge fund, my own money, trading it publicly on Trading Analysis, and just tried to build up the credibility, focus on the markets. And then, I guess I'm 46 now. Last couple of years, we went into marketing to try to, build a good active management, wealth management business. I just feel like there's too many people just collecting their 1% fee, sitting on their butts, indexing the money, giving people underperformance for the 1% fee, limited financial planning. So, it was just, my mission was clear, to try to develop a company that provides value in terms of somebody who's sitting here watching. I've got my team as well backing me up, but we don't take our eye off the market. So we're trying to offer alpha, or we try to deliver outperformance relative to the benchmarks, net of fees. That's my goal. There's no guarantee we do it, but also we put hedges on, we raise money, we raise cash, put hedges on when volatility kicks up. So active management. And I find that so many of our community, Joel, who's so smart and so tuned into the markets, they don't even want to deal with those guys who are just indexing the money and not paying attention to it. So, active management, I think, is super key. There's plenty of opportunities in this bull market that I still believe are in. So, if you can't, I would say, put your best foot forward and try to, deliver some additional value compared to the indexes. Like, what are you paying for? What are you paying that money manager for? So the other part that I find is really important, especially with traders, Joel, is, guys have a hard time compartmentalizing their different trading accounts. You got to have your money for, short term, your medium term, long term goals. What money do you trade? Where do you put hedges on? What's tax efficient? So financial planning is the other half of the business, and that's really important. Again, especially for active traders in here. And my company was built to do that. I mean, Inside Edge, I was a ski racer in college, so we kind of have a little bit of fun with that theme, where most money managers, again, either have an older, beautiful couple walking on the beach, sailboat, or a lighthouse. Those are the three images that you're going to find. So I'm like, nope, we're Inside Edge.
And I can personally attest to that he's doing pretty darn good. So I will just leave it at that. So definitely worth a look. Todd Gordon, Inside Edge Capital, tradinganalysis.com, contributor to CNBC and Bloomberg. If they don't have you, they probably should. So
it's not in my I can't. It's in the contract. I'll be on Thursday on CNBC. But I appreciate that, Joel. You're awesome, and sorry to be quiet, but
you're busy. I know you're busy, man. You're busy.
I'm trying to just focus on the markets. I need to do marketing, but it's just markets. That's my job now. I'm running a lot of millions of dollars. I got to be heads down.
Okay. All right. Well, thank you very much for joining us, and we'll dial you up again soon.
Appreciate it, guys. All the best.
All right. Extended conversation here with Todd Gordon, Inside Edge Capital. We are bouncing around like a ping pong ball here. Really, market having a hard time finding direction. JV Spec mentioned yesterday about, some reduce of the consolidation here. That's certainly what we're seeing.
Yep. All right, Joel, let's jump over to Stock Trader Network. We got a couple news items to catch you up on. We'll get you ready for the open. Maybe take a little look at imbalances, take a look at what's moving the market, what's driving the market today. All right, folks, we'll be back tomorrow with another episode of Pre-Market Prep. Later, everyone.